You're watching ET Markets Live. I'm Neha Vashisht. Welcome to a brand new episode where we are going to talk about AI, which is certainly the talk of the town and its role in the mutual fund industry. Joining us today is Bruce Keith, CEO and co-founder at Investor AI. Thanks so much, Bruce, for joining us today on ET Markets Live.
Thank you, Neha. Delighted to be here.
So let's quickly start our conversation by exploring how AI is changing the game for mutual funds, especially when we talk about the front end and the consumers. What's your view on this?
So if I look at it on a global perspective,
Hmm.
and if I take the US for good or for bad as the kind of front end of what's going on in the mutual fund world, the US has been working. The US mutual
Hmm.
fund industry has been working with AI for a number of years, and I think we're playing a little bit of catch up. If I'm being honest, because if I
Hmm.
look at kind of the mutual fund industry in the US, they are several steps ahead. In fact, if you look at that market today, and I just looked up the results, 35% of their mutual funds are quant or AI based versus about 1% in India. So the kind of
Hmm.
differential is really quite big. So I think we've got a way to go. What are they doing? They're using AI to help look at market sentiment, select the right kind of stocks and the right strategies, help them stay within those strategies, as well as
Hmm.
writing the kind of research papers that go behind it. So I think that's where they are. If I look at the industry here, we're still sort of catching up to that. So we're moving in that direction, but right now the focus has probably been more on how we use AI to build the kind of back end and create more efficiencies in the back end rather than to drive the research.
Hmm. All right, Bruce. You mentioned that approximately 35% funds
Yeah.
in the US are AI based, and the number in India is quite small. That means there is a big scope of knowledge and understanding required here. So let's also talk about what kind of AI models are mutual funds companies using today, and how is it different from generic tools like ChatGPT?
Yeah. Look, I think all of us can use ChatGPT, and ChatGPT is a good thing. But when it comes to being an AMC or a mutual fund, you've got to try and find a differentiator between you and the next person.
Hmm.
So what we've done, we've built our own foundational AI. So we don't run anything on ChatGPT or on Gemini or on any other platform. We built it and we run it ourselves. We built the servers, we write all the code, we've written everything end to end, and we've done it all in India as well. So this isn't
Hmm.
something that we've imported from somewhere else. So I think it's possible to do that. I think if you want to run it on one of the kind of Gen AI engines, I think that will help you with certain parts of your process. But I don't think that's the way to really create a differentiator in the market. If we look at what Renaissance has done in the US, or what Jane Street do, kind of whether you like it or not, they don't build it on
Hmm.
someone else's AI, they build their own. And I think from a country perspective, we've got to focus on building more of our own foundational AI, particularly when it comes
Hmm.
to asset management, because that's where you create an edge.
Absolutely. And is there any proof or real world example you would like to tell us where AI-led mutual funds have actually outperformed others?
So, the kind of obvious stat. I mean, you don't get to 35% market share in the US unless you're kind of delivering something. So that says one. If I look at our own AI, we're not mutual funds, but we're providing equity baskets. So that's still
Hmm.
making recommendations and picking the equities and kind of rebalancing. But and what we've seen since kind of go live with that product in April 21, so 4 and a bit years, we've seen a CAGR of 45%
Mm.
against a market CAGR in the same period of about 17%. So kind of more than double the market in kind of live trading. So that's also a kind of a useful proof point. In terms, as I say,
Mm.
mutual funds in India, I think, we've been a little bit burnt by the kind of first steps into quant. So everyone's kind of still trying to figure out what to do and how to kind of make AI really work for them.
Right. Bruce, let's also talk about retail investors. If anyone wants to understand how AI helps in recommending the mutual funds based on an investor's risk or appetite or even goals, how does it actually work? Can you explain it to us?
Yeah, look, I think I think ultimately we are governed rightly by kind of regulatory rules, and they're there
Mm.
to protect the end consumer. And the way that the regulation operates is it really forces you down a route of asking people questions, and from that defining where you understand their risk appetite to be. You don't need a massive amount of AI to do that. That's a reasonably automated process, and
Mm.
robo advisors have been doing that for a while. So I don't think AI helps you with that, because that is kind of there and it's set out by regulation. What AI does really interestingly, and we helped someone with this a couple of years ago, is based on someone's trading, what risk are they actually taking? Because right now, what risk I answer to those questions versus what risk I actually take may be two
Mm.
different things. And what I do with my money is absolutely real versus how I answer questions when I'm asked questions by whether it's a chatbot or a human. Doesn't matter. I
Mm.
will answer in a particular way. How I treat my money is different. So we did an exercise with them to try and identify the kind of differences. And there were about 40% of people within that who had declared themselves to be a particular risk profile, but their actions showed them to be something completely different. So I think where
Mm.
AI usefully comes in is actually to say, we know you've said you're high risk, but that's not how you act. The way you act is much more medium or low risk, and obviously
Right.
variance along that. And because of that, don't put yourself in the high risk category unless you really mean it. So I think it's a useful tool in helping create that balance and that feedback loop.
All right. Bruce, let's also talk about AI-driven advisory platforms. The number is rising fast. What's driving this boom right now, and what does exactly a platform like Investor AI do in this space?
So so I think part of the boom is everybody wants to be AI, don't they?
Hmm.
Tell me a CEO at results announcement this year who didn't mention AI some point in his address to his shareholders. Um, so I think part of it is a little bit of branding, um,
Yeah.
and I think because it's really easy to access the kind of Gen AI products, it's easy to put some AI into your business without it really kind of meaning something. If I look at kind of what I would call, genuine AI plays, certainly where the foundational AI has been created by the platform. There's much less of those kind of around, but why do I think there's an attraction there? I think the fact that you've got a lot of young people who are more likely to trust AI than some of the institutions that their parents would naturally have trusted. I think that
Hmm.
that kind of plays a factor in here. I think the fact that it is in the news, everyone's interested, albeit depending kind of who you are, different degrees of kind of fear that kind of go around that. I think if you've tried it and you've made money on it, the fear factor disappears quite quickly and the greed factor kind of comes in. So you want to try kind of more and more of it. So I think you've got a bit of that going on as well. I think what we've got to keep doing is we've just got to keep demonstrating to people that
Hmm.
when you remove a lot of those kind of human biases that exist, what AI does, AI doesn't go to sleep. anyone who's a portfolio or a fund manager has to have time off, go to sleep, sick days, whatever. AI is on it the whole time. So you've now got something that's working for you whenever you want it to work for you. And I think that's kind of really important, because we've got used to, whenever we want food delivered, we go to Swiggy, or we go to Zomato. We go to all these different places to kind of get things instantly. And we've not been able to do that with financial services. AI has got the ability to bring that cost of manufacture down and to deliver what people want when they want it.
Well, very well explained. Let's also talk about some concerns. When I was reading up about AI in the financial industry, I one question that popped up in my mind was about the responsibility factor. So, in case of AI, who takes the responsibility? Because in our traditional setup, we do have fund managers, experts for accountability, in case anything goes wrong. So what happens in terms of AI if something goes wrong? And what about the SEBI regulations also as well?
Yeah, look, that's a great question. I think that I think you've still got to have a human in the loop. I think the idea of kind of removing kind of humanity from the loop altogether is a wrong one. And
Mm,
certainly in our business, whilst we use AI to do a lot, there's a final review stage that goes through to make sure that we're happy, not just with the individual stock picks, but we're also happy with how they come together as a collection as well. And before that recommendation goes out, it has to be kind of formally signed off. So we work through that process. I would expect everyone else to work through a similar process as well. And if I think about SEBI's most recent circular that it sent out one on AI and ML last week. It was very targeted at people around the industry, but
mm,
it didn't say very much about manufacturing. So it didn't really say anything when it came to mutual funds and manufacturing and how you use AI for kind of stock picking. It talked about AI in the back office, so how you might
mm.
treat customers or run their accounts or all of those things, but not how you actually go run the strategy. And I think the biggest impact AI can have on the industry in India is by doing that, you bring the cost of manufacture down. If you can bring the cost of manufacture down and create a good product for consumers, then you bring the cost of the product down as well. So we
Mm.
all benefit in the long term from that.
All right. So you mentioned about AI reducing the human biases in the fund management, but does it also come with its own set of risks? Because we know that there are pros and there are cons to every single thing.
Yeah.
So what's your take on this?
So it does reduce bias, but it's got bias as well. So
Mm,
it take we all have bias, right? When you meet someone in the street for the first time, you make snap judgments on them based
yeah.
on all sorts of different things. So biases are kind of what makes us human. So I think to say removal of bias is a good thing isn't necessarily a truth. So machines will reflect whatever biases the kind of the data and the programming's gone into them. And one of the best examples of that in recent weeks is the kind of random, if you go and ask any of the Gen AI ones, so Chat GPT or whatever you use, to give you a random number between, I think, 0 and 50, you'll pretty much
Mm.
across all of them get the same number, right? And you get the
Okay.
same number from every single one, because they all take, apart from Grok, because it's based on
Mm,
Twitter data, ignoring that one for a second, all the rest of them, the data they've got has come from human biases already. So there's human
yeah.
bias inbuilt into everything that it does. So to say there's no bias is kind of definitely wrong. To say that bias is bad is also wrong. I think what's difficult with AI and certainly explaining AI to people is how do you demonstrate where that bias is or what that bias is towards? Because
Mm,
again, if you meet someone in the street and our biases kick in, we also have biases are going on the other way. So you have some sense for that, and you kind of balance it out. You can't do that the same with a machine. So I think one of the things that we as an industry have to do, we have to be much more transparent about the kind of data we're putting in, therefore the implicit biases that come from that.
All right. Let's also talk about market volatility. We know that something or the other thing is happening in the markets, be it the US or a war is happening, sometimes some domestic issue is happening. So how does AI handle the market volatility in these situations?
So So, I don't think we're going to find an AI that can predict what President Trump's going to do from one day to the next. So let's kind of put that aside for a second. I think that so if I look at our AI for a second, a few weeks ago, so just before the whole kind of Israeli Iran stuff started to kind of kick off,
Mm,
that weekend Friday predictions, it suddenly went. So for all of our India models, it said everything should be going to healthcare. Now it's unusual for it to sort of go quite so concentrated at any point in time, but it was a really big signal that it saw a big risk off signal coming, and it was kind of moving in that direction. Now the human overlay reduced some of that.
mm,
But as it turned out, there were things. Now it couldn't have predicted that was going to happen, but there was clearly enough in the volume and what was going on that isn't obvious to the naked eye for it to be able to sort of pick up things that we don't see. And our engine runs 1 trillion data points every day.
yeah.
And it's impossible for you or I to kind of go do that. So
Mm,
it will pick up underlying signals that we might not obviously see. So can it tell what the president's going to do next? No, it can't. Can it tell where the next war is going to start or what impact it's going to have? No, it's not. Can it pick up on some of the kind of volume and trading that's going on around that and make some assumptions off the back of it? Yes, it can. I
mm,
think what it can also do is you can run it all the time. So one of the benefits you've got is you don't have to stay in a position. You can kind of go run it again and go run it again and go run it again. And that, because your cost of manufacture is low, you don't have to go and bring a whole pile of analysts in
yeah.
and get them to kind of go run a whole lot of stuff to 2 or 3 days later come up with a portfolio. It can be done much quicker. So your ability to respond is much better. And I think that, again, that dealing with all of that data and being able to respond to that is
Mm.
a positive fact that AI can bring to the mix.
All right. So, Bruce, before we close our session for today, any closing remarks you would like to talk about especially for retail investors or people out there who have inhibitions when it comes to AI?
So I think where Wall Street goes, Dallas Street will follow. So I expect to see more and more AI coming. I think as an industry, we've got to be better at having a transparent framework to allow retail investors to understand. We use lots and lots of kind of terms which make sense in the AI world but don't necessarily translate. So I
Mm,
think we've got to really kind of get together with SEBI and put a framework together to make it easier for kind of users to understand. But what I would say is I'd say try it in a small way, and
mm.
with any of these things, see if it works for you, but don't ever make it 100% of your portfolio. It should only ever be a portion. It should be 25, it should be 30. It should only ever be a portion, in the same way that you should have some good active fund managers doing a portion and you should have some passive doing a portion. So I think I have it as about 1/3 of my portfolio. I would hope everyone else starts to look at something similar.
All right, great. Well, this marks the end of our segment for today. Thank you so much, Bruce, for taking out time and joining us today on ET Markets Live. It was a pleasure talking to you.
Thank you, Neha. I had a lot of fun.
Same here. Thank you so much.
Thank you.